Welcome to Talk Tickers. You're tuning in for our deep dive into the latest earnings call from KONE. We're here to unpack the key details for you.
Yeah, and KONE really kicked off the year on a positive note.
Good start then.
Definitely.
Right.
Overall order intake was up 5%. But interestingly, if you exclude China, that jumps to over 10% growth.
Wow. Okay, so China's dragging a bit, but strong elsewhere. What's driving that growth?
Modernization was a big piece of it, a really key driver. But, new building solutions also had some notable wins, particularly over in Europe.
And sales, did they follow suit?
They did. Sales grew 2.8% at comparable currencies. Again, modernization and service look strong. Service actually hit double-digit growth outside of China.
Double digits, nice. So it sounds like let's say the more established parts of the business are really humming along. How about profitability?
That's another good part of the story. Their adjusted EBIT margin, it improved again. That's the 9th consecutive quarter.
Ninth, impressive consistency.
Right.
By how much?
Up by 25 basis points this time. So yeah, that upward trend is definitely continuing. Shows good operational control, I think.
And cash, always important.
Very strong. Operating cash flow saw a nice jump, up around 90 million euros compared to last year.
90 million, okay.
Yeah, landed at 487 million euros total. So solid cash generation.
All right, let's dig into that modernization piece you mentioned. You said it was a key driver.
Oh, absolutely. It was an outstanding quarter for modernization. We're talking nearly 20% growth.
20% in both orders and sales.
Both orders and sales. Yeah, really strong.
What's behind that surge? Any specific examples?
Well, there was a pretty significant order, for instance, from the Sojo government in China.
Okay.
It's focused on urban renewal, involves modernizing over 2,000 elevators. And interestingly, it includes things like regenerative drives and connected services.
Regenerative drives. Just quickly for listeners, that's the tech where the elevator actually feeds power back when it breaks, right? Saves energy.
Exactly that. It captures energy that would otherwise be lost as heat. It's becoming a really big deal for energy efficiency, driven by regulations and just plain cost savings for building owners.
Makes sense. Any other modernization highlights?
Yeah, they mentioned progress on modernizing Prague's tallest skyscraper. Again, energy efficiency was a major focus there.
Okay.
And stateside in Washington, D.C., they're involved in revitalizing the Capital One Arena. That project includes both new units and modernizations, plus they're providing ongoing service too.
So it really is a global push then. Upgrading existing stock seems like a solid trend. You mentioned a specific package in Europe too.
Right, the Monospace DX upgrade package.
Yeah.
Orders for that grew nearly 30% in Europe.
30%.
Yeah, and it just got an A-class energy efficiency rating, which really resonates with the European market's focus on sustainability.
Clearly hitting the mark there. Now, you also mentioned strong service performance, especially outside China.
Yes, double-digit growth there. That's really nothing to sneeze at in the service business.
Definitely not. What's enabling that?
A big part is connectivity. They've made a real push. Now, 36% of their entire service base is connected.
36%. Okay, that's quite a chunk.
It is. And they've rolled out remote service capabilities more widely, too, now available in 15 countries.
And that helps how?
It means they can often diagnose and sometimes even fix issues remotely. Much faster resolution times, better efficiency for them, and less downtime for the customer. So you can see areas where they have that direct customer relationship modernization and service. They're doing really well.
Right. Which brings us to the new building solution side. Sounds like that was maybe a bit more challenging.
It was, yeah. Bit of a mixed picture. Like you said, China remains tough.
How tough?
Orders there down about 15%. Just difficult market conditions overall. Although they did say they saw some maybe tentative signs of things bottoming out towards the end of the year.
Okay. A glimmer of hope, perhaps. What about other regions for new builds?
Europe showed some slight improvement in demand. And they've rolled out a new elevator for the low-rise market, the Monospace 100DX, into several new European countries. Early feedback and tendering activity apparently look promising.
Good. And North America?
North America saw a bit of a decline in activity. Part of that was attributed to uncertainty around tariffs.
Oh, tariffs. Always a factor these days. So, yeah, external factors definitely playing a role. Let's switch back to profitability. That margin keeps ticking up. What's the secret sauce there?
It's largely down to that favorable business mix we talked about. The strong growth in the higher margin service and modernization businesses is really helping lift the overall average.
Makes sense. Makes matter.
It really does. Now, it's not all rosy. They still face margin pressure in China, specifically in new equipment, and there's some negative impact from fixed cost absorption.
Okay, so challenges remain.
For sure. But they do have ongoing performance initiatives, things like procurement savings, sales excellence, operational improvements. They expect those to have a greater impact later in the year.
Got it. And sustainability seems increasingly important too, not just for image, but operationally.
Absolutely. They even introduced a new sustainability index to track their progress against long-term goals.
Okay.
And remember those regenerative drives we mentioned, over half the elevators they sold in Q1 were equipped with them. That's a significant increase.
Over half. Wow.
Yeah. And they continue to get external recognition too. Still on the CDP list for climate change, still on the Clean 200 list. It signals commitment. And like we said, it often means real cost savings for customers down the line.
Okay, let's zoom out a bit. What's the big picture view of the market and KONE's place in it?
Well, the global installed base keeps growing, obviously. Hit about 25 million units in 2024. What's really interesting is that modernization was actually the fastest growing market segment last year.
Faster than new builds or service?
Faster than new builds, yeah. Grew by 9% in 2024. And KONE seems to be capitalizing on that. They gained market share in modernization everywhere, globally. Global, yeah. And they also gained share in services markets, but specifically outside of China.
Okay, so holding their own and gaining in key areas. What's their outlook for the rest of the year?
For the full year 2025, they're guiding for sales growth between 1% and 6% at comparable exchange rates.
1 to 6%.
And an adjusted EBIT margin in the range of 11.8% to 12.4%. So still aiming for improvement there.
But you mentioned exchange rates earlier.
Right. FX is expected to be a headwind. Based on April rates, they flagged a potential negative impact of about 50 million euros on EBIT.
Ouch. So that's something to watch. And the outlook for the different market segments.
Service and modernization, they see continued interesting opportunities, outlook unchanged there. For new building solutions, they've tweaked it slightly.
How so?
Expecting a slight decline now in North America, citing that uncertainty we discussed.
Tariffs and general conditions.
Exactly. And they expect slight growth in Europe. So bit of divergence there.
And speaking of tariffs, how are they managing that U.S. impact? You said it was a factor in North America.
Yeah, they touched on that. Apparently, less than 10% of their U.S. sales are actually impacted imports, and about a quarter of those come from China. But they seem confident in their mitigation actions.
Such as?
Things like specific contract language, applying for exemptions, and adjusting their sourcing where possible. They seem to feel they have it reasonably under control.
Okay, good to know. And China, always a major focus. How's that market evolving?
It really is evolving. They said the market there is now roughly split 50-50 between new construction and then modernization and service combined.
50-50. Wow, that's a big shift from, say, 5 years ago, right?
Huge shift. Used to be overwhelmingly new construction. On the new construction side, they mentioned seeing some, again, very early signs of potential stabilization, particularly in the Tier 1 and Tier 2 cities. Things like improved liquidity, some positive trends in land transactions and prices.
Still early days, though, it sounds like.
Very early days. And the competitive intensity, especially in new construction, is still fierce. They noted smaller, local players are finding it particularly tough.
And KONE's strategy there?
They emphasized focusing on, quote, healthy business, which means, prioritizing profitable deals and reliable customers rather than just chasing volume.
So maybe sacrificing a bit of order growth or margin in the short term for better quality business.
That seems to be the implication, yeah. It might impact order development and margin slightly, but they believe it's the right long-term approach. And encouragingly, they did mention that their accounts receivable situation in China is showing improvement.
Getting paid is always good.
Definitely. It suggests that shift in commercial focus towards more reliable partners might be paying off.
Okay. So boiling it all down for someone tracking KONE or maybe the wider sector, what are the main takeaways you see from this call?
I think, first off, the real strength and resilience of their service and modernization businesses. That really shines through. It suggests a smart strategic focus on those more stable, often higher margin revenue streams.
Right. Balancing out the new build volatility.
Exactly. Second, the more cautious outlook for new building solutions, especially in China and North America, clearly reflects those current macro and, frankly, geopolitical uncertainties that are out there.
Can't ignore those.
Definitely not. Third, you have to note the consistent margin expansion and that strong cash flow. It really demonstrates effective cost management and good operational execution on their part.
The ninth straight quarter, yeah.
Precisely. Fourth, the emphasis on sustainability isn't just talk. The growth in regenerative drive sales, for example, aligns with global trends and offers tangible benefits to customers. It's becoming a real selling point.
And potentially a long-term advantage.
Could be. And finally, I'd say their ability to navigate things like the U.S. tariff situation, using localized operations and contractual tools, is pretty noteworthy for investors who are watching global trade dynamics closely. Shows adaptability.
Okay, that's a great summary. Now let's pivot to our favorite speculative segment. This is not financial advice. Based purely on the tea leaves from this con call, what's an outrageous but maybe plausible trade idea that comes to mind?
All right, let's have some fun with this. Okay, here's a thought experiment, strictly hypothetical, mind you.
Understood.
Given KONE's clear strength in modernization, particularly in Europe where sustainability is key, and the contrasting sluggishness and tariff worries in North American new construction. How about a pairs trade?
Ooh, okay. Tell me more.
You could, theoretically, consider going long a company that's heavily focused on, say, smart building tech and energy-efficient retrofitting services, especially one with strong European exposure, think building controls, advanced insulation, that sort of thing.
Right, leaning into that modernization and energy efficiency trend. And the other side of the pair.
The short side could be perhaps a North American manufacturer of basic building materials.
Yeah.
Maybe something like drywall or standard lumber that's really dependent on the volume of new construction projects and might be more exposed to import cost volatility or project slowdowns. Less pricing power, perhaps?
I see. So you're playing the renovation retrofit theme against the potentially slowing new build theme and adding a geographical overlay based on KONE's commentary.
Exactly. It tries to capture those contrasting dynamics we just talked about, the resilience of upgrades versus the uncertainty of new builds, plus the regional differences, without actually betting directly on KONE itself. But seriously, this is just kicking ideas around based on one earnings call, purely a thought experiment.
Absolutely, not financial advice, but a fascinating way to think about the ripples from one company's report. Okay, that wraps up our deep dive into KONE's latest earnings call.
Yeah, we've gone through the results, the strategic moves, the outlook. Hopefully it gives you a much clearer picture of what's driving their performance right now.
What stood out most to you listening in? Any questions still lingering in your mind? As always, we strongly encourage you to dig deeper, do your own research, and form your own conclusions.
Definitely. Thanks for tuning in to Talk Tickers.